Today we have Kunal. Last week we did speak about Fibonacci, and today Kunal is going to have an extension of the last week's Pathshala, isn't it, Kunal?
Well, absolutely, Cheryl. So today, which the topic which I'm discussing on the Pathshala segment is on the Fibonacci, on the application of Fibonacci numbers. So we saw the sequence, last week of how the Fibonacci sequence or the number series moves up, and then the golden ratio, which we discussed extensively about the 61.8% retracement. But now using those Fibonacci numbers, how do we use this or apply this into critical moving averages? So I've placed in two charts over here. One is on the weekly time frame. So this is the Nifty 50 chart, and what I mapped up is a Fibonacci number, which is an 84 simple moving average. So it's a very easily plottable a kind of a indicator on any kind of a software which a viewer generally uses. And what we've tried to indicate is that closer to these Fibonacci related moving averages, they act as very strong periods of supports as well as resistances. So this is the chart which pans out over the last 5-6 years on the Nifty. So if you go back to the first chart, it indicates that whenever the index gets into a correction, the correction somehow halts or pauses closer to this important moving averages. If you go back to the previous chart, and when those points actually become very strong contrarian bit of support points on the Nifty. This is the second chart on the Nifty Bank Index where I've done this same analysis on the smaller time frame. So again, this is a very simple Fibonacci moving average, a 13 SMA being a Fibonacci number. 13 is, and look at the fluctuation of the banking index closer to this moving averages. So whenever it breaks past or breaks above the averages, a new uptrend starts. The retracement which happens closer to this averages are actually taken as good buy zones. And then on a downtrend as well, when the index moves up higher, closer to this moving averages, they act as resistance points. So this becomes very easy to understand the market trend on a daily, on a weekly, as well as on a monthly time frame. So the application is diverse for Fibonacci series and the sequence. But then I've just started to give an indication of how this can be used on a weekly as well as on the short term time frame for short term as well as long term trend analysis.